Alright, what's up guys? Welcome back to the channel. Today is Sunday, March 10th. Hope you're all having a great weekend. And a quick look here at the economic calendar. A couple things on the agenda for the week ahead. Tuesday morning, 8:30 a.m. sharp, we got the CPI report. And then on Thursday morning, also 8:30 a.m. sharp, we have the PPI report. Be there or be square. And then on the S&Ps here, we got the monthly chart pulled up, and we hit a pretty big upside target last week. We had that monthly squeeze. She fired to the upside about 1, 2, 3, 4 bars ago. We've been working a target of that 5,200, and on Friday, we got as high as 5,189. So potentially close enough for government work. And I think that's going to be a pretty big level for the week ahead. One thing for your daily chart to be overbought, one thing for your weekly chart to be overbought. Anytime the monthly chart's up here at that 3 ATR, doesn't mean we got to pull back, doesn't mean we can't keep going higher, but probabilities-wise, we're definitely closer to the end of the move than we are to the beginning of the move. And then for the QQQ, a couple of red flags here. You've got that monthly chart up there at 3 ATR, and then over on your daily time frame, we've got a pretty big divergence. Divergence meaning on the big three squeeze, momentum is going lower. Now we're having trouble getting momentum back above the zero line, and all the while, price just keeps going higher. And we're going higher on a blue candle. Blue candle on the big three is neutral. Meaning we're going higher when the combination of the structure, momentum, the moving average crosses, everything is no longer perfect. Anything less than perfection, when your monthly chart is up there at 3 ATR, not all that sustainable. And then on your 30-minute, 15-minute, and 5-minute time frames, we got a few sell signals coming through. And then a few of your bigger tech stocks. Apple is pretty fugly. And we had that big 3-day squeeze. That bad boy broke short, and I think Apple might want to go test that 165-ish. The 3-day 200 SMA and some previous support. You've got Google. My good old buddy Google. That's got a daily sell signal. You've got Tesla, and Tesla is just getting spanked here. And the thing about Tesla, we've got sell signals on the weekly, the daily, the 4-hour, the 2-hour, the 15-minute, and the 5-minute. And we've got a big monthly squeeze. Mighty, mighty interesting. So yeah, it's a very interesting spot. The S&P's got within a stone's throw of that big 5,200. We are now up there at that monthly 3 ATR. QQQ's got some sell signals. You got a big divergence. Apple looks like crap. Google crapping. Tesla crapping. But then on the other end here, if you look at a few more monthly charts, you've got things out there like the small caps. While the S&Ps and the QQQ look a little bit more cooked, the small caps here, that's a bit more fresh. Beautiful monthly squeeze. It's an A+ setup. It is a 10 out of 10. We got buy signals. We got good structure. That all implies that the IWM, not this week, not this month, but 2, 3, 4, 5, 6 months from now, that monthly squeeze might want to take that towards 235, 240. You've got things out there like the energy sector. A really good-looking monthly squeeze. That one could take you to about $100. You've got the financial sector. That monthly squeeze just fired long, and that could take you to about $43. And then you've got the equal-weighted S&Ps. The RSP. Pretty big breakout last week. We'll see if they can keep it above that level this week. But nonetheless, nice monthly squeeze. 10 out of 10. Good structure. The buy signals. All the fixings for a push out there towards 177. So yeah, I think it's an interesting moment in time. The S&P 500, the QQQ, I tend to think in this market, QQQ is the most important. The Mag 7, the FANG stocks, they're pretty cooked. All the way up there at that monthly 3 ATR. And then there's a few different pockets of the market. They're kind of on the other end. They're in compression. They're all building up energy. They look like they want to go for a move higher. I think the million-dollar question is, if QQQ does pull back a bit more, that's going to put some pressure on the market. Can things like the small caps, energy, financials, can they buck the trend well enough to keep the S&Ps going higher in the face of a potentially softer QQQ? And then I think a big part of it will be your semiconductors. And if anything this week, watch NVIDIA like a market internal. The same way you would watch the ticks, the same way you would watch the advanced decline. Keep a really close eye here on NVIDIA. And, remember, guys, I'm not saying NVIDIA is going to have a big pullback this week. But keep in mind, when the pullback begins, doesn't happen over the course of 10 days. Right? It's not what I would call a gentleman's pullback. It's pretty fast and furious. You saw a little bit of that on Friday. We're up here at the highs at $9.74. We close $100 lower. We are still $100 above that 21 EMA. So I do think NVIDIA is a huge part of this market. NVIDIA kind of leads the way for QQQ. Down goes NVIDIA. I think down goes QQQ. Down goes QQQ. That's going to put a little pressure on the rest of the market. The classic rules. As goes your leadership, goes your market. So my game plan this week, lower time frame squeezes. I think a good rule of thumb, when the QQQ, the S&Ps, and all your leading names, when they're all the way up there at 3 ATR on the monthly chart, shift your focus from from a swing trade approach to a bit more of a day trade approach. And for me, when it comes to day trading, I'm looking for the same thing I'd look for on a weekly chart or a daily chart on a 15-minute, 30-minute, or a 1 hour. Squeeze first focus. I'm going to use the big 3 indicator. Same entries, same exits, same everything, just on a lower time frame. And I think that could be helpful this week. For example, take SMCI. Whenever we're that far above the daily 21 EMA, me personally, I kind of like to chill on the swing trades. My daily squeeze target or my daily target would be 1246. Meaning, if I buy SMCI right here, I might catch about $100 higher. However, we are about $250 above that 21 EMA. I'm on the wrong side of risk reward. I might catch 100, I might lose 200. I want the opposite. Now, granted, things are really bullish. Big 3 scores a 10 out of 10. We got buy signals. For now, everything still implies a path of least resistance is to the upside. Being that we're a bit overbought, my plate of opportunity, that's going to come from something like a 1 hour time frame. I'm going to trade that 1 hour squeeze the same exact way I would trade a weekly or a daily squeeze. More importantly, though, if I can anchor to a lower time frame, I can define my risk. I can still put myself on the right side of that risk reward. If I buy it at 1140, I'm going to close that trade on a break of that 21 EMA. My target would be 1230. I'm going to risk maybe $20 to potentially catch about $100. I like that risk reward. If I'm going to base things off the daily chart, I don't love that too much. And then same thing for a short. QQQ. Yeah, we got a few sell signals, we got a few divergences, but the QQQ's just been so strong. My first couple of shorts, I might do that on an intraday basis, down on a 15-minute, a 30-minute, or maybe a 1 hour. If I can short it here around that 439, I'm going to cover my short back above my hourly 21, so I'm going to risk about $3 to potentially catch a flush down towards 433-ish. Again, point being, lower time frames can give you clarity. Lower time frames can also give you a really good risk reward. And that'll be the focus for this week, guys. No biases on my end. I'm not going to go into tomorrow bullish. I'm not going into tomorrow bearish. I'm going to be flexible like Gumby. Whatever the market gives me, I'm going to take it, and I'm going to take that in the form of a lower time frame squeeze. So that is that, and we're looking for another good week here. Last week was a pretty good one. We had the calls on Bank of America. Beautiful daily squeeze, and we sold those for about a 75% profit. We had a call debit spread on Microsoft, and that one was a bit of a stinker. We lost about 25% on Microsoft, and then on the futures, I want to say it was Thursday, we bought some calls on the S&P futures, and we flipped them out for a day trade, 50%. 50% profit on that one. So 2 for 3 on the week, and we're looking to do a little bit better this week. But alright, y'all, thank you for watching. Have a great night. Enjoy the rest of your weekend, and I'll see you tomorrow morning, 7:45 a.m. Central for pre-market prep. Adios.